Hey, if you're running a UK business and you feel like you're paying way too much tax every year, you're probably right. Most business owners are missing expenses they could completely legally write off. And today, I'm going to walk you through the big ones, whether you're a sole trader or a limited company director. Let's get into it. But before we get into the list, there's one golden rule you need to understand. Under UK tax law, an expense has to be, and I'm quoting this directly, wholly and exclusively for the purposes of your business. That's it. That's the test. If it passes, you can claim it. If it doesn't, you can't. Simple as that. Real quick, if you're finding this useful already, go ahead and hit that subscribe button right now. We put out straight talking tax and business advice every single week, and most people tell us they wish they'd found this channel sooner. So don't miss out. Subscribe and stay in the loop. All right. Let's start with the one most people are already sitting inside right now, your home office. If you work from home, part of your household bills, electricity, heating, broadband, can become a business expense. The easiest way is the flat rate method, which gives you £6 a week. No receipts, no faff. But honestly, most people could claim a lot more using the actual cost method, where you work out what percentage of your home you use for work and claim that share of your bills. If you run a limited company, here's something most directors don't know. Your company can actually pay you rent for using your home as an office. Done properly, it's one of the cleanest and most tax-efficient ways to get money out of your company. You'd need a reasonable amount, a written agreement, and it reported correctly on your tax return, but it absolutely works. Next up, your phone and internet. As a sole trader, you can claim the business portion of your personal phone bill. So if about 60% of your usage is for work, you claim 60% of the cost. But if you're a limited company director and your company pays for the phone contract directly, the whole thing is usually deductible. It's one of those small changes that immediately makes your setup more tax efficient. Okay, travel. This one disguises itself as multiple expenses, and they all quietly add up. If you're driving to meet clients or attend business events, you can claim 45 pence per mile for the first 10,000 miles in a tax year. Drive 5,000 business miles? That's £2,250 in deductions, just for driving. Applies to both sole traders and limited company directors. On top of mileage, any business train tickets, taxis, flights, overnight hotels, even parking, all claimable. And meals during a business trip? Deductible too. HMRC might raise an eyebrow at Daily Lobster, but a working lunch or dinner with a client? Absolutely fine. Equipment is another big one people constantly miss. Laptops, monitors, desks, office chairs, keyboards, printers. If you use them for your business, they're claimable. And here's something really useful. If you already own equipment you're now using for your business, you can still claim it at its current market value, even if you bought it before you started the business. Software subscriptions work the same way. Accounting tools like Xero or QuickBooks, design tools like Canva, marketing platforms, fully deductible as long as they're for business use. And if you run a limited company and you've been paying for these personally, your company can reimburse you, still get the deduction, and you get your money back. Clean and fully legit. Now this next one genuinely surprises people. You can legally hire family members, pay them a salary for real work, and that salary becomes a business expense. Admin, bookkeeping, social media, customer support, all genuine roles. And because they can earn up to £12,570 a year completely tax-free using their personal allowance, that's money that could have been taxed at 40% in your hands. Going out at zero. Completely legal. Just make sure they're actually doing the work. And finally, pensions. Massively underused and incredibly powerful. As a sole trader, every pound you put in gets 20% tax relief added automatically. But as a limited company director, your company can contribute directly into your pension, reducing the company's taxable profit while building your retirement fund at the same time. You can contribute up to £60,000 a year, and you can even carry forward unused allowances from the previous 3 years. So let's bring it all together. Home office, phone and internet, travel and mileage, equipment, software, family salaries, pensions, On their own, each one saves you a bit, but combined, we're talking thousands of pounds every single year that you are legally entitled to keep, and HMRC is definitely not going to ring you up to remind you about any of this. The difference between business owners who overpay tax and those who don't really comes down to one thing: knowing what you're allowed to claim and setting it all up properly. If you want help doing exactly that, there's a link below where you can book a free discovery call with our team. We'll go through your specific situation, show you what applies to you, and help you keep more of what you earn. And before you go, if this video helped you at all, please do 3 things for me. First, give it a thumbs up. It genuinely helps more business owners find this content. Second, drop a comment below and let me know which expense surprised you the most, or ask me any questions and I'll personally reply. And third, if you haven't already, hit that subscribe button and turn on the notification bell so you never miss a video. We're here every week helping UK business owners pay less tax legally. I'll see you in the next one.